Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of September 11th, 2016. Well, we certainly had a dramatic end to the week last week, didn't we? I've been talking about for several weeks that the market was just trading in an incredibly narrow range, and at some point we're looking for a market correction. And so if there was a bear market, it was sleeping like this fella in the picture here. And now the big question is this guy awake and is he angry? Well, I'm not sure if that's the case yet, but let's take a look at the charts and the reality of what's going on in the market. So here is the S&P 500 on the daily chart, and you can see here's Friday, this big huge drop, over 2% in the S&P 500, nearly 400 points on the Dow. And now here's this narrow range that we've been talking about. Really unusual, really unusual. It's hard to go find a period like that of just such narrow trading for that long of a period as you look back. And that pattern is certainly broken. And of course the question is what's next? Is that bear awake and is the market heading down? Well, I don't think there's clear evidence of that yet. It was certainly time for a bit of a correction to this move we had from Brexit and really to this year. So I've got it marked here. I've been talking about it. We've had an Elliott wave pattern here. This is a wave 5, a wave 4 correction. Sorry, this was 3, this is 4, and now we had 5 that went right into the projected zone and it stayed there for a long time. And after that, we expected at least a small pullback. Now, is this the big one? There's no evidence of that yet. There's no evidence. There is a pretty good sized correction coming, but we don't know if that started yet. But we certainly did break this pattern, and this is probably going to continue for a little bit longer. Let's look at a little bit smaller time frame and see what we got. So this is the S&P 500 futures on a 60-minute chart. So every price bar here represents 1 hour. And you can see here's this big move up that started back in June post-Brexit, and then this long period of channeling, of sideways movement in activity, and then here's Friday's move down. And now for this impulsive move up, a retracement is normal and expected, part of a healthy ongoing market cycle. And we've got a retracement zone drawn here using the Fibonacci retracement tools. And so we expect price to come down between these two blue lines here. Now it probably won't continue just straight down. That's not how price moves. It moves as it's going down, lower lows, lower highs, and let's draw that on here. So I've expanded it just a little bit, and let's see. We've got this big dramatic move down here. Now Monday when the market opens, will it continue down? Don't know. We can't tell for sure, but typically market moves. This is a lower low, and then a lower high, and then a lower low, and then a lower high. It works its way down in this kind of fashion. And again, we're expecting it to come into this zone at a minimum, and that's between 2104 and 2065 on the S&P 500. So in the near term, that's what we're looking for. That's the highest probability scenario. Now that's barring any additional major shocks. It could be anything from breaking news about what the Fed's going to do, other unplanned things, terrorist attacks, anything like that can really cause the market to move in really dramatic fashion. But barring any big breaking unexpected news, the high probabilities we would see something like this down into this zone for the short term. Now in the longer term, again, there is a fairly good sized correction coming, and let's just review that on a longer term time frame. So here's the S&P 500 on a weekly chart, and here's the this bull market that we've been in for a long time that started back in '09, and it's been going up for nearly 7 years now. Pretty remarkable bear market after the crash of '07-'08. Now, just again, part of a normal, healthy market cycle that has gone on since there's been a market is, the market moves up in impulsive waves and down in corrective waves on an ongoing basis. So we're at the top of this. This is a very mature bull trend. You can see it losing momentum. Just as you look at how price is moving, it's slowing down. It's put in a new highs here over the last couple months, but they're not substantial highs. They're very incremental. And at some point, there's going to be a correction. If it were to start now, and I'm not declaring that it has, we don't have evidence of that yet, but when it starts, and we'll see it because we'll get lower lows, lower highs, lower lows, proving that the trend has changed, then we expect the bigger term picture for the S&P 500 to correct down into this Fibonacci retracement zone. That's the high probability. That's what it does and has done over decades of time. And that would take us down to 1689 to 1373 from these current levels. So when that starts, there's going to be a lot of profit to be made for people who are prepared and informed and have the right tools. For those who are buy and hold folks, it's going to hurt. So I hope they have a long time frame for the next upcycle, because that could be a long ways off into the future. We do have lots of things people are worried about: terrorism, bank rates, the presidential election coming up, and any one of those could be the trigger that gets things to start down. And the timing is right for, again, we're at the end of a very long move up, and so there will eventually be a decline. Could it go make new highs before then? Well, sure it could. Could it be starting now? Yes. We don't know, but we will know when it does start. It will prove it, and it won't be in an instant. It will take a little bit of time to prove it, and I'll be providing week updates at least once a week where we can track that. Let's move over and take a look at gold now. This is the gold futures contract on a daily chart. And I've been saying for weeks that I thought the top was put in. At least in the intermediate term, I think the top was put in for gold, and it's really proving that. We put in a nice top. It went into this zone that we predicted. We predicted this back at the beginning of the year. We thought this rally was coming on. We saw a corrective move down, and we predicted that it would go up into this range between these two green lines, and it made it right into that range. Now it's heading down. Lower low, lower high, lower low, so far lower high, and heading down. Interesting that as the market dropped pretty dramatically on Friday, gold did not rally. So that's a pretty interesting move. On the big picture, gold and equities have an inverse correlation, and they typically move in the opposite direction, but that's not happening right now. And so again, I think the top is in for gold. It may channel, go sideways, have some volatility, but there's no clear trend. We really can't go short on this. There's not enough profit or clarity on where it's going, and it's way too late to be long on gold. So gold, we're just going to wait and see. If the really, really big market correction eventually starts, then gold could take another move up, and we'll be watching for that, and we'll of course provide that update. Here is the oil future contract, the crude oil futures, and we've been looking for recovery in oil for some time now. Again, back at the beginning of the year, as it crossed 37.09, we said that the recovery was underway. We traded this leg with great success and profit. This correction was inevitable. Again, impulsive moves, corrective moves, and it looks like we're getting ready for the next impulsive move up. It's been very volatile, but all the technical indicators are showing us it broke up above the Ichimoku cloud here. We see some momentum beginning to go positive in the oscillator. It's in this early stage of the next leg up, but it really does look like it's getting started. It won't be smooth. Oil is volatile, but the anticipated range for oil over the long term through this year and next year is low 60s to low 80s, and we'll continue to provide updates on that. But it's really we're getting prepared to take some long trades. In fact, we've taken some long trades in oil, and we will be taking more as this proves itself. Well, that's the update for the week. Again, looking for a short-term pullback for sure to continue in the broad markets and the S&P 500. We think gold's at a top, and we think the recovery in oil is trying to get started here and has some pretty good promise. Be sure and stay tuned. We'll provide updates. It won't be boring, and we'll have to see if that bear's waking up and getting angry. Thanks, and we'll catch you on the next update.